Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of the Foreign Account Tax Compliance Act, FATCA, in accordance with H-1B visa holders. H-1B is a type of work visa, and there's many different types of work visas. There's the L series, there's the O series, but overall, the H-1B is one of the more common, at least for our client base. A client comes over here on an F1 or a J1, then they extend it to an OPT possibly, and then they move into H-1B status before determining whether they want to be a permanent resident. It doesn't have to be that way, but that's generally the way it works. So not all H-1B visa holders are subject to U.S. income tax or FATCA FBAR. It's just if you meet the substantial presence test. So let's kind of work backwards here and go through how you get to that unfortunate point, right? First of all, who is a U.S. citizen? Or who is a U.S. person, to be more accurate? There's three categories. For individuals, U.S. citizen by birth or naturalization, legal permanent resident / green card holder, or foreign national, such as an H-1B visa holder who meets the substantial presence test. Now, the first two categories make sense, right? Citizen, you're a citizen. There's really no way around that. Permanent resident, well, the term is permanent, so it would make sense that you may be subject to some of the U.S. tax and reporting laws. Now, for visa holders such as H-1B, it's a little less known because you're here temporarily. I mean, that's the idea behind it. You're not permanent, so it's not really fair. But like I was saying, not everyone who's on H-1B will meet the U.S. person worldwide income FBAR FATCA reporting scenario. Rather, it's only people who meet the substantial presence test. So let's skip down to what the substantial presence test is first. Substantial presence is numbers counting, days counting calculation. So essentially what happens is if a person is in the U.S. For at least 183 days over the past 3 years, they're considered to meet the substantial presence test. Now, it's not 1-to-1 every year. So in the current year, it's 1-to-1. If you're here for 100 days, it counts toward 100 days. When you go back a year, it's 3-to-1. If you're here for 90 days, you only use 30 of those days, a 3-to-1 ratio. The year before that, it's 6-to-1. So if you were here 60 days, you only count 10 of those days. Sorry, numbers on the fly. So essentially 1-to-1, 3-to-1, 6-to-1. And if you meet that, you're considered to meet the substantial presence test, and then you're subject to U.S. tax on your worldwide income reporting and all that kind of stuff. There is exceptions, there's exclusions, things of that nature, so it's important to go through it. I find here, no matter how advanced we get in this area, at the end of the day, just go through the IRS instructions, the publications, the revenue manuals. Those are great resource guides to kind of help whether you qualify for things like an 8840, a closer connection exception, or other sort of items like that. So what happens when you become a U.S. person, you meet substantial presence? Well, you're taxed and you must report your international worldwide assets just like you would as a U.S. person or green card holder. Totally unfair, right? So for FATCA, that means reporting your specified foreign financial assets. For FBAR, it's reporting your foreign bank and financial accounts. For tax, you're taxed on your worldwide income. So you're living in the U.S., you got a bunch of money in a different country, generating income. You might have consulted in a third country. The U.S. is going to tax you on all of that income in any year you meet substantial presence. The nice thing about having a temporary visa is at the end of the day, when you decide you don't want to be a U.S. person anymore, you just leave the U.S. and you don't meet that counting days test. It has to be 31 days in the present year. So if you're not here for 31 days, absent some other limitation or exception, then you're not going to meet substantial presence, even if you calculate the 2 prior years and you would exceed 183 days. So what do you do if you're non-compliant for prior years? You never heard of this ridiculous rule, you've never followed your FATCA or FBAR. Like I always say in these videos, beware of the garbage and the fear-mongering you find online. There's a whole bunch of amnesty programs available. Depending on if you're willful, you do the traditional voluntary disclosure program, which is used for domestic and offshore ever since they got rid of OBDP. And then there's a host of different non-willful programs: streamlined domestic, streamlined foreign, reasonable cause and delinquency procedures. We have lots of free information available on our main website, goldinglawyers.com. You can always contact our firm to schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.